So, welcome back to Integrity's Accounting Showcase. And we are going to have another insightful conversation from the world of accounting. I'm your host, Chris Rivera. And each episode, we are diving into different topics and trends, as well as what inspires people to get into this profession. So, today we're speaking with industry expert, Joe Woodard. Joe, thank you so much for joining us. How you doing today? All right?
It's great to be here, and I'm doing great.
Good, good. So, so everyone sit back, relax. Let's get into today's episode. So I want to ask Joe, can you share a little bit of background on to how you got into coaching and working with accounting firms? I mean, was accounting profession something that was always in your vision? Can you talk a little bit about that?
No, it actually was not always in my vision. I'm one of these people that kind of threw away a 4-year degree, or at least my financial investment in one, by majoring in classical Greek, the language, not even the history. So if you ever need say Plato translated from the original Greek, I'm your guy.
All right.
Which of course that did not produce a livelihood, as you can imagine, since everything that's ever been written in that dead language has been translated thousands of times over by people smarter than I was. So I had to go find something to do with my life after I basically studied basket weaving, and I ended up at a temporary agency, and they placed me with an accounting firm for a 3-day filing project. They liked me, I liked them. One thing led to another. I worked in their office for about 6 months, and then they liked me even more. So they paid for me to go study accounting at the University of New Orleans at the graduate level. And hired me as an associate in their firm. And you know what this taught me, Chris, after now being an employer, business owner for 23 years, an employer for 15 of those, this is what it taught me. You hire the person, you hire the aptitude, you hire the proclivity. If you can get the knowledge and experience, of course, prefer that as well. So they knew that, and they saw that I had the aptitude. They stuck me in front of a DOS-based tax preparation software solution back in the 90s while I studied accounting, and I was billable and highly profitable from my first quarter there. So they saw something in me, and that led me into accountancy.
Every time I ask that question, I'm always excited to hear. And wow, so it's just something that you were given you were presented an opportunity, and you really made the most of it. That's awesome.
You know how many people, Chris, have told me they didn't find accounting found them?
Yeah.
You probably hear that a lot too, right? Isn't it funny how accounting finds the people that it wants to be, to have in its occupation?
It's incredible, because maybe if I spoke to 50 people and that are in the accounting profession, 1 or 2 since day one, like wearing an accountant's t-shirt or something when they're a kid, it's always some type of impact within someone's life that they get thrown into this profession, and they go so many different ways, which is the most exciting part about it.
It's a diverse occupation, it's a diverse field for sure.
And folks don't realize that. It's incredible how, yes, you have your accounting degree, and it's not just, doing tax returns or data entry. It is so much more. So you are an accountant doing the day-to-day work. What made you want to get into the whole coaching aspect of it?
Yeah, well, my journey went from a path towards CPA, which is what I was going to graduate school to do, to get enough hours to sit for the CPA exam. But I fell in love with the accounting technology side of things. And what launched that was the QuickBooks desktop product of the 1990s that so many people kind of built a cottage industry around. Our firm realized that same opportunity, very forward-thinking firm in the 90s to think that way, because right now we just presume in the United States of America, of course, every CPA firm understands the QuickBooks opportunity. But back then that was revolutionary to see it. But they saw it, they made an investment in it. We started doing all this technology training. There weren't many add-ons. It was a closed architecture, so we had to figure out how to do it all in the product and working with our clients. And I became the QuickBooks guy at the firm. And a lot of your listeners may have been the QuickBooks lady or the QuickBooks guy at their firm, right? That was chapter 2. And then chapter 3 is I went on to train at a national level, teaching my peers with a national training company on QuickBooks. Wonderful guy named Doug Sleater that you may know. He's a thought leader within the industry still. He sold SleaterCon to Diversified and became Accountex USA for many years. So then Intuit hired me on a training contract after I left the Sleater group to train pro advisors. This was in the early 2000s. That's what actually led me to coach accountants. So those were the stepping stones, is the CPA firm to Doug Sleater to Intuit. The Intuit contract matured into me launching my own direct coaching business, coaching accountants, not just in QuickBooks. As a matter of fact, we wouldn't even train on QuickBooks anymore. It actually evolved into the point, well, we do it at our conference, but not throughout the year. But now it's evolved to the point where we're focused on practice growth, practice management, pricing for all accountants, whether you use QuickBooks or not. That's the maturation of the Woodard brand.
Nice. And so all because of technology. And so you literally have kind of pieced together how you got there. And so when you're working with a new client, you've done this, right? So you can, what is a common challenge you would say that you identify within a client, or what is the commonality in general as far as, a client that's ultimately successful or going to be more apt to go about the program? Like, what do you see as far as challenges, and then also on adaptability from clients too?
I'm going to start with the key one, and that's pricing. I mean, a lot of people start with staffing, and staffing is going to be my close second. So let me kind of put it, I'm going to frame it actually in two different ways. I'm going to say for firms that have less than $1 million in sales, or let's go less than 5 million in revenues, okay. I'll call it. Pricing is the chief challenge. And often they're not at where they need to be because of a pricing problem. For firms over 5 million in revenues, which is largely the top 500, and they're in the credentialed space, it's mostly staffing. So those are the two challenges we go at first. But at the end of the day, the firms that are smaller still have both problems. We just go after the pricing problem first, because if we can solve the pricing problem, it addresses the staffing problem by either reducing their clientele, because the clients fall off because you've introduced the new price. You don't do the new price to fire clients, but when you correct price, it's inevitable you will lose some clients. So that takes care of capacity, takes care of staffing for just a minute. But then when you're building it back up with the correct price, you have the profits necessary to invest in staffing, like account managers, for example, who can support a portfolio with a very much higher skill set. And I know I'm getting into some of the way we address the problems, but then we couple the account managers with staffing solutions. But we can't do any of that below the 5 million mark until the pricing is fixed. Above the 5 million mark, if they already have good pricing, we go after the staffing problem, as I just described.
I see. Yeah.
I over-answered the question.
Yeah, because it's always interesting on what is typically the right client for folks when you're in this profession. With us, it's the same type of approach. It's just simply having an open mind. You got to start right then and there. But when you're looking at it in your perspective, pricing, and that has become, the firms that like yourself that have done this in the 90s and have already gone through some of the changes in which firms are seeing today, it's just, no one had an open mind in general to get this going like you did back in the day, back in the 90s, because having already done it and seeing that it provides true value into what you do and how you work with, how you approach it with your own clients. But
we
now
have to always be innovative. It's just that now the bleeding edge thing that people know is out there but need to pay attention to is artificial intelligence, generative AI. But the generative AI for 2024 is the QuickBooks desktop of 1994. We just have to be ahead of the curve.
Exactly. Exactly. And I feel that over the last few years, the profession has definitely been more agile and adapting faster than ever because you got to. It's constantly evolving. And so what do you recommend for firms out there that are trying to keep up? I mean, what's some of the strategies in which they should go about today's changing accounting world?
All right, so that's a very loaded question, and I would love to answer it. So the first thing is, I'm going to get back to the pricing thing. I would challenge the listeners here: do not try to compete on price,
Hmm.
because first, it was never a good way to build your portfolio, because you're basically creating this big boat anchor, this big pricing
Okay.
anchor, an albatross, if you want to use the metaphor. So it was never a good strategy, but even more so, it's not a good strategy because of the scaled competitors that are in the space. H&R Block, Bench, Pilot, QuickBooks Live, all of these they're able to offer these aggressive prices because they make up for the economics on scale. I mean, and we're not talking thousands, we're talking tens of thousands and eventually hundreds of thousands of clients kind of scale. So don't try to compete on price. You won't win. And there's always somebody else out there who will run themselves out of business on a race to the bottom, who will always undercut you if you attract a clientele that engaged you because of your price, which is kind of the problem number B, is don't hire the wrong client. I love your question, Chris, is who would be our ideal client in our coaching program? Well, we had to ask ourselves that. We don't want to just take any accounting firm because they happen to have a check in their hand. We want to attract people where we can actually make a difference. Coachable firms that want to scale or grow or build their infrastructure, develop themselves, not just come and learn and get CPEs, because we're a coach program, not an educational program. So now, if you want to come to Scaling New Heights just to get CPEs, you are welcome. We'll take your check, right? That's an education program. On a coach program, we want moldable clay. Well, the same should be true of the accounting firm's clients. You want moldable clay. You want a client that you can make a difference with. And even if that doesn't mean that you become a business coach yourself, stay in your swim lane, stay an accountant. But it means that if you're the tax preparer, it needs to be somebody that will listen to your tax advice. And if you're a bookkeeper, or as we're saying now, client accounting services professional, you need to have somebody that will listen to you about your cash flow or listen to you about the structure of your general ledger. They still have to be coachable. And so first, don't compete on price. As a matter of fact, price to your value and use it as an appropriate filter. Second, let that price, as well as other kinds of filtering sets of criteria, an ideal client profile, let that filter who you let in. So now you have a priced right portfolio of coachable, workable clients you enjoy working with. That sounds very idyllic, but it's actually achievable. All right, so the next suggestion I would give is to make sure that your team has a very healthy culture and that your team is built to scale. And now we get back to what I really like is the 1-2 punch of the full-time person who is highly skilled, who is client-facing, dealing with contingency, special considerations, and escalations. And the things that are cyclical and repeatable, you use a combination of highly defined process and outsourcing to someplace offshore. Because in that kind of an equation, you are always going to maximize profitability. You're going to mitigate the staffing crisis, which is systemic here, really globally in the accounting profession, but really bad in the US. And the client is going to receive the same quality of experience, if not actually, Chris, better, because of the fact that they're going to get their information more timely. You're not going to have capacity problems on deliverables. And that math just works. What I would encourage people not to do with staffing is not to get 1099 contractors, because in the United States, it's increasingly difficult to qualify them as contractors anyway. They're probably really employees. And if you can make them contractors, I say you have security and privacy issues and quality control issues because of the fact that you're 2 arms length. So to get the quality you want, they have to be an employee. So therefore, the contractor thing's a bit of a myth. Then I don't recommend part-time employees, because part-time employees can work out well, but there's a high employee turnover. You're not their livelihood. They're not as invested in you because you're not their career. And there's a reason they're part-time, because there's something else in this chapter of their life that is as important or more important than their work. And that's great for them, whether it's their children, their aging parents, their hobbies, great for them. But that's not great for you in many cases. So I would stay away from contractors. I would stay away from part-time. I would prioritize full-time in combination with outsourcing. So now we have three things I would give to answer your question is, don't compete on price and actually make pricing a model that you adhere to. Create an ideal client profile and stick to it. Have a positive culture in your firm with a correct staffing and resource strategy built around scale and profitability. Those are the three first ones. I've got four more.
Four more. Just that. No,
I thought I'd pause and see if you had any comments.
That's important to identify right at the top, right? Do you have the right client? Do you have the right team? Do you have the right, mindset in place? Because folks, they believe they're ready to get started, but they're really not, right? Or they think their team is ready to get started, whether their team is themselves and someone else, or they have a team of 200-300 folks. So involving them is key, absolutely. And then I feel over the last 7 years, I've spoken with accountants that they used to let their clients run the firm, and that's not the case anymore. They are looking to identify their ideal client, and it's so important. And sometimes they end up becoming niched or different avenues for that. So I agree. Yeah, spot on as far as how to get this started. How to get excited about this. Because no matter
what, hit a nail on the head too. It's not that we are in the service of the client. Yes, in the most technical sense, yes. But we're not their employees and we're not their contractors. They like to use the word that they've hired the CPA, which I guess is technically true in the terminology of our industry, but I do not like that term because it immediately puts it into an employee-employer framework. I am not the contractor for my clients. I'm their expert. I'm their business advisor. I'm their coach.
Yeah, exactly. And this helps with collaboration and teamwork, and everybody is on board, ready to do this. So now using technology, right? So it's a crucial role, as you've seen it since day one, and really are now coaching that aspect of it. So how have you seen firms leveraging technology when you first started till now? Do you still think that technology is far advancing the folks that are adopting it, or do you feel that the adoption has picked up? You feel that all your clients are extremely tech savvy? Can you share some thoughts on that?
Yeah. All right. So first, it is picking up, and it's becoming a more mature process, but it's still a tiger by the tail, and that's not the fault of the firms with whom we work. It's just organic to the moving target that is technology. I mean, technology is advancing so quickly that that is impossible for a firm, unless they have a research and development department, to keep up with all of the changes and to make sure that all of the latest and greatest technologies are incorporated into all the process and the employee learning curves. And there's all this vetting that has to go on before you can adopt a solution. You've got to train the client, not just your team, and how to use it in order to standardize everything around it. It's not just daunting for small firms, it's virtually impossible. So what I'm finding is that the firms themselves are very technology savvy and highly agreeable to the use of technology. They've bought into the value proposition, and to a large degree, they're starting to flip into technologists who happen to do tax returns and accounting, especially on the accounting side. And that's a good thing, but it is a difficult tiger to hold by the tail. So when you start getting into some of our larger clientele, because we consult with firms all the way up to the top 10 largest in the world, they have dozens of people, if not hundreds of people, in their research and development department not
Mhm.
just vetting technologies, but also creating custom code to fill in the gaps where those technologies don't work. I mean, the best that a small firm can hope for is to write a few zaps, but these people are doing their own UX and API calls, and they're building these technological infrastructures around the moving targets. And then they have client learning centers, and they have employee training centers, and they have all these resources that they can put into democratizing the knowledge and standardizing the process. And now enter the small firm. How on earth do they keep up? So my advice to the small firm would be keep it simple. I used to say be monolithic. I actually went through a chapter in my life where I responded so to neutralize this tiger by the tail problem, to cage the tiger. I was saying just put everything in one system, which is, by the way, where Zoho has had great success. And I think that's one of the reasons they're one of the fastest growing software companies in the world, still privately owned if I didn't miss a memo. But yeah, I mean, just a multi-billion-dollar corporation taking over country by country because they have that very simple monolithic value proposition for the business owner, not as much for the accountant. It's getting there, but for the business owner that says one thing, just buy one thing, end the noise. And there's a very powerful message in that. The accountants can't get off quite that easy, because QuickBooks Online doesn't purport itself, and Xero doesn't purport itself, and Zoho Books does not purport itself, even Zoho Books does not purport itself to be the one-stop shop. They have to talk to some other things, especially if you're playing the QuickBooks and Xero card, the two market leaders. So how many things it talks to are key. So listeners of this podcast, I implore you, do not over-attach. Do not accept too many forms of technology. It is okay to stitch 3 or 4 together. And that we will call Frankenstein's creature, because it was a creature, not a monster. What made it a monster was that it had too many parts and an abnormal brain, right? And that's what you'll end up building if you stitch too many things onto the platform in too many convoluted ways. So creature's okay, monster's bad. And then I would say, if you're looking for the essentials, there are a couple of ways to keep this tech stack streamlined. One is general ledger plus payables indispensable. Well, I would say all spend. So payables, spend cards, check, all that stuff, right? Any way that money's coming out of the company, that's an essential attach. The second, and then after that, start being discretionary, highly discretionary. So not that you wouldn't attach other things. The next thing is getting back to something you said, Chris, don't let the clients run the house. It's okay to broaden your technology stack to say, now we're also going to include fill in the blank category. But it is not okay to say that we're going to support 20 solutions in that category because 100 of our clients use 20 different things. It'll break. Yep. It'll break.
Well said. And, looking at upcoming trends and developments, I mean, what do you anticipate that to be the next fast-moving change for accounting firms, and how do you prepare your clients to kind of navigate through these?
All right. Well, the biggest change coming, and I know everybody says the same answer, and it's going to become trite to say it, but it's AI. And we had this message back at our Scaling New Heights event in 2018. We called it Tame the Machines. And we were talking about how artificial intelligence was going to be this disruptor, and you get to choose if it's positive or negative, and people did look at us a little bit in 2018, like, we had 4 heads, and maybe that just meant we had 4 brains looking at the problem. I don't know, but they were looking at us like we had 4 heads, and they were thinking, Joe, this sounds interesting, but it sounds 50 years from now. All right. So fast forward 6 years, and I had said 5 for the record. I'd said 5, but fast forward 5 to 6 years, and here we are. All right. So now everybody is going, well, this is a trendy topic. I just read an article this past week where accountants are largely dismissing its practical impact in the latest sort of poll done by one of these Accounting Today or CPA Practice Advisor. And I was like, yep, this is the way it goes. You dismiss it until you can't dismiss it anymore because it's human nature. I'm not faulting the profession. We all do it. It's just this healthy sense of denial, right? But I would encourage your listeners to say this is not a fad, and this is not something that is a flashpoint now for a change in the future. This is an imminent singularity that is about to hit not just accountancy, but humanity. At our upcoming show in June in Orlando called Scaling New Heights, Michio Kaku is coming to join us. It's a name your listeners may not necessarily recognize, especially with the pronunciation, but you'd recognize who he is. He's been on History Channel's The Universe. He was just on Good Morning. It goes around 60 Minutes. And in 60 Minutes, as well as his latest book, The Quantum Supremacy, that he published, he is talking about this imminent singularity. I would encourage your listeners to go watch the 60 Minutes episode. You can stream it on a lot of streaming platforms because it's affecting all of us. And it's the intersection between quantum computing and artificial intelligence. Artificial intelligence is a set of algorithms. It's code. It's only as powerful as the machine that will realize it. So think of the quantum computer as the actual brain, and think of the artificial intelligence as the mind. And it takes both of those things to operate a human being. Well, the brain is about to get infinitely, and I'm not using that hyperbolically. It is about to become infinitely more powerful. And because the quantum computer is not the next generation, it's not like an M4 chip. It is a completely different kind of technology. So Michio Kaku is purporting in his book, essentially, he doesn't use these terms, that right now we divide time into BC and AD. And essentially, we are now going to divide it into BQ and AQ. It will divide the entire direction of the human destination. And it is imminent. I mean, we're talking 5 years imminent. So it's an interesting topic to think about, but I could not, even though it sounds again like I sound like I'm coming across to your listeners like I came across in 2018 when I said, hey, artificial intelligence is coming in the next 5, and they looked at me like I had 4 heads. If you're listening to this and you think Joe has 4 heads, what's this quantum computing and singularity and change direction of humankind? Are you kidding me? Really? Just listen to me, please, because in 2018, those that listened to me, I was right. And it's not because I'm smart, Chris. It's because I'm reading people who are smart. Okay. And they've got this down. They're saying 5 years.
No, and I agree. You mentioned earlier AI, and now you're like, I was like, what's a concern for the future? You're like AI, and you get it. You've seen it happen. You've seen it come to fruition, and I couldn't agree more, because I'm a, what do you call it? I'm a geriatric millennial, so I was born early 80s, right? So on the
I love
first
that
ever
term. I love
millennium,
that term.
first ever millennials in the history. But anyway, I say it because I didn't have a cell phone until I was 20, right? And folks are, that's not the case anymore. So it has enabled me, though, to understand the evolution, but it has changed the last 20 years. Oh my God. It has gone. The first 20 years, it was kind of like just getting used to the internet, getting used to everything. But the last 20 years, I'm mind blown. And I always tell folks, you can love it, hate it. I've embraced it because it's getting smarter, just like you're saying. It's incredible. But first 20 years of my life, things that were slowly the last 20 years, just as a whole, it's incredible.
Well, the acceleration point, correct? I mean, what we've done in the last 50 is infinitely greater, again, that word, than what we did in the 6,000 prior to that. So even without the advancement of quantum computing, we're talking about a rapid escalation of technology. But quantum computing is going to take Moore's law and it's going to throw it out the window. And in a good way, it's going to escalate it even faster than Moore's law. And it is imminent. So how do we land the balloon then? What does it mean for the listeners here? First, I'm going to take the pressure off you. The people that are smarter than you and Chris and I in terms of coding computers are already on top of this. They're already building artificial intelligence algorithms. the sort of waymakers of this, IBM and Apple and Google and others, are already advancing this cause with or without us. The question is not, do we need to do anything, like go back to school and learn how to master AI? No. No more than we needed to learn how to code QuickBooks Desktop or Peachtree software back in the day. It's not a question of do we change occupations or do we have to become a computer person. It is knowing where this technology puck is going and what the implications are going to be for the way you operate your practice on a daily basis. And the biggest implication you're going to see, the biggest impact you're going to see, is this combination of extreme automation of the bookkeeping and tax process to take humans out of the equation more and more and more and more, with a pricing pressure that will follow right in its wake. We're going to get the efficiencies first, and then we'll have a breath, and the pricing pressures will follow very quickly after. So my encouragement to everyone is, if you want to know what to do in response to the quantum artificial intelligence revolution in 5, maybe 10 years at most, it's invest now in what the machines will not be able to do then. If it's cyclical, repeatable, and predictable, and built around a finite set of parameters, the machines will get it, and they will get it fast. The tax return's the first thing to go. Audit will be next. Accounting will actually follow last because it has more variables. But they will eventually all fall. Everybody says rush into advisory, which is a very nebulous, broad term. If we call advisory financial planning and analysis, that is not a safe space. A quantum powered artificial intelligence of 5 to 10 years from now can do financial planning and analysis in milliseconds at a level greater than the human brain, and provide actionable management advice that will be smarter than you. That is not your safe haven. So where do we need to live 5 to 10 years from now? We need to live in the operational elements of accountancy, what I call controllership. So when Michio Kaku was interviewed recently, not on 60 Minutes, but yet another interview, he said, he was asked, which jobs will survive the quantum revolution? And he said, blue collar jobs, because the computers will know how to fix a toilet or an HVAC unit. And right outside now, I hear the background noise of lawnmowers going in my yard. I work from home. It can understand how to run a lawnmower or even how to design one, but it can't push one, right? So not until, of course, we've watched Boston, the company, I want to say Boston Electronics, but that's not it. Mechanics, the mechanics company building the robots.
Yes.
We've Tesla's building a commercial robot. Of course, that's coming. That's still going to happen. And now all of a sudden, the quantum computing with artificial intelligence is going to take on a bodily form, but it's going to be the last domino that falls. When it comes to controllership, how long will it take before a computer can call somebody that is breaching spend policies and help them to understand how to book their travel better, or sit down with an owner about budget overruns and the politics involved in getting the other shareholders of the company to control their spending? Oh, that'll survive. So when you are controlling that back office, and you are the operational gatekeeper to protect that business's journey, you become indispensable to that journey in a way that computers will empower you, but not replace you. Embrace controllership.
There you go. That is great. Joe, wow. Thank you so much for taking time out today. I could sit here all afternoon and talk about this.
And I could as well, but I'm sure your listeners only have so much bandwidth on their drive. So,
but I couldn't agree more. Just based on everything you said, in my own personal experience and how I've seen things come to fruition, and so the way you think is spot on. And listeners out there, really appreciate you guys tuning in today and think about it from, like I mentioned earlier, with an open mind. That's all. Just take things in perspective.
You have to ride the currents of this thing, Chris.
Don't be negative. Don't be positive. That's not necessary. Just open mind. When you start there, then you can at least take in the information and make decisions at that point. That's what worked great for myself, and just
That's
learning.
great advice, Chris.
everything.
I would recommend the same. Yeah.
Yeah, that's all you got to do. But yeah, there's a lot of valuable insight today. Again, really appreciate you taking time out. To all of our listeners out there, we will be back with more episodes. Follow us on social media, like, subscribe, follow, comment. I'm missing one. But yeah, keep exploring, learning, dive into this profession as a whole. There's a lot going on. And Joe, we will talk to you soon. See you soon in a couple of weeks, probably. All right.
Yeah, it's great being here. Thank you, Chris.
All right. Take care.